The month of April is now behind us, and what a month it was. In fact, for the S&P 500, it was the best month since 1987. Yes, you heard that correct. Now, keep in mind, context, of course, March was a horrible month, so we're just snapping back a bit, and we still got a lot of work to do before we're back to all-time highs, but at this point, we'll take what we can get, as last month it was a struggle in March. So nice to see a little bit of a rebound here as we're up about 13% this month. Now that leaves us with bullish postures on all of our four major U.S. equity indices, but we did have a little bit of a sell-off here today. The S&P 500 was down about 1%. Small caps were down a bit more than that. We did have some big earnings reports after the bell with Apple and Amazon, both somewhat disappointing Wall Street, as both of those were selling off after hours and the futures were down just a touch as we head into May, which many of you are aware generally gets the bears out of the woodwork saying sell in May and go away. So we'll see if that happens this year or not. So let's take a look at all of that, and then we'll get into our trade application example, where I wanted to focus on a stay-at-home stock that is having a nice little bounce here today, giving us a close above the high of the low day setup. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's April 30th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe, and while you're over there, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. I would encourage you to follow me there. My handle is @BrandonVanZ. If you get value out of these Market Outlook videos, we'd encourage you to click like and retweet. And then also wanted to remind you that this weekend I'll be tuning in and very curious about Warren Buffett's thoughts on the economy and the stock market. And many of you know that I've followed him for quite some time, and Berkshire itself. So if you want my thoughts on that, of course, I'll be on Twitter sharing those thoughts with you Saturday afternoon as that event is going on. And then lastly, we do have a presence on Facebook as well. Over there, you can join our group, and you can see the web address that'll take you to that group that's embedded in the logo there in front of you. All right, let's go ahead and jump into our charts here. As you can see, I've got chart 4B pulled up here in front of us. And this will give us a good high-level overview of the four major U.S. equity indices. And you can see here that the S&P 500 was down 0.92% today. The Russell 2000, it kind of shifts in the after-hours session. So a reminder now that this whole coronavirus has made all of our schedules go haywire. I have to wait much later into the night than I traditionally have recorded these videos in the past as a result of me having to be a preschool teacher during the day for my kid and then wait for my wife to get home from her job before I can start working on these Market Outlook videos. So my apologies for getting these out later than I typically had in the past. Eventually, we'll get back onto our normal schedule again if they open up the daycares. But anyway, one thing I've noticed as I've been doing these a little bit later in the night than I typically have is that the Russell 2000, for some reason, does go to kind of flip over to this 000 status here, whereas a lot of these other indices still give us the actual correct data from earlier in the day. Now, if we were to look at a proxy for the rut, you could look at IWM to gauge approximately what it did today, and IWM was down 3.8% today. So point being, remember, we've had a lot of conversation in the last couple of weeks about how the small caps have been kind of playing a little bit of catch up here more recently. Today, they unfortunately had to give back a bit more of that. But, you can see that it's been some pretty good progress there for the small caps here more recently. One thing that I would like to point out as well is that we do have bullish intermediate confirmation signals on 3 out of the 4 charts you see in front of you. Now remember, just 2 nights ago when I did the video last on Tuesday, we also had some bullish intermediate confirmation signals that I was discussing at that time. And then yesterday we did have a rally. So with these bullish intermediate confirmation signals, does that mean we're going to get a rally tomorrow? Hard to say. At this point, it's not looking so good. As I mentioned before, with Apple and Amazon down after hours, that's a significant portion of the market. Both those companies around, that $1 trillion market cap, and so they have a heavy weighting on the markets themselves. So if they have a poor showing tomorrow, pretty decent chance that the markets themselves will be down. However, some of you are aware of kind of a quirk in trading in that the first day of the month more often than not is an up day for the stock market. I know that sounds crazy, but it's true. For those of you that want to learn more about that, I would encourage you to check out Stock Trader's Almanac. I'm sure you can pick up a used copy on Amazon pretty cheap. But they've done a lot of research, a lot of work. It's gone back a long period of time, and strangely enough, a significant portion of all the gains the stock market has ever had is as a result of the first day of the month phenomenon. And there's been some theories as to why that might be the case, including some 401k plans getting funded, or other pension plans or retirement plans getting funded on the first day of the month, or perhaps executive bonuses going into the stock market, or what have you. So whether you buy into all of that or not is up to you, but factually speaking, you have seen some evidence to suggest the first trading day of the month, more often than not, is a positive day. So we got a couple things fighting against each other there. We do have some bullish intermediate confirmation signals in the first day of the month phenomenon, suggesting maybe tomorrow we could get an up day, but we are fighting against some negative futures right now as a result of Apple and Amazon struggling the way that they are. Now, back to the conversation about the bullish intermediate confirmation signals. On Tuesday, I mentioned how we would not consider them to be ideal signals. Now, they were true signals. In other words, they were produced. It's just that there are ways that you can try to identify whether the signals are better setups or worse setups. And I mentioned one of the things that we look for is for that blue near-term line to be somewhere between 50 and 20. And so we're again struggling with that same concept today because again, yes, we sold off today, but it wasn't an aggressive sell-off. A lot of times when you're thinking about a buy the dips signal, you're thinking about a much more significant pullback than just a 1% move like we experienced here today. So like on the S&P 500 here, you can see the green line is strongly bullish right now. It's in the upper reversal zone. It's matched up with a red line that is in the lower reversal zone. That all by itself is a bullish intermediate confirmation signal. But we've noticed that this blue near-term line, it's a better signal if that blue near-term line is below 50 but above 20. You can see right here that blue near-term line barely even budged today. So once again, we do not have an ideal setup there, even though the setup exists. Same thing can be said over here with the Dow Jones. You also have bullish intermediate confirmation signal there as well, but again, not an ideal setup with that blue line sitting there at around 64. Down below on the IWM or the Russell 2000, here, you can see it suffers from a couple of different things. Not only is the blue line not in an ideal spot between 50 and 20, but there is such a thing as too much of a give back on the red line. Typically, you don't like to see that red line below 5. And you can see right here that the momentum line on the IWM closed at 1.31. So almost too much of a give back in that particular case. So while we could very well get some sort of a bullish move tomorrow, just know that these would not be considered ideal bullish intermediate confirmation signals, and therefore you might want to position size accordingly if you're going to be trading off of those particular signals. In terms of any other movements, just be aware the Dow Jones got beat up here the worst today. It was down over 1%, 1.17% to be exact, and then Nasdaq Composite had a pretty quiet day, only down 0.28%. Remember, Microsoft actually ended up having a pretty solid day. If we were to look at MSFT, they had their earnings yesterday, and their stock was actually up 1% today as a result. So some pretty strong operations there out of Microsoft, whether it's LinkedIn, their Teams product, their traditional Office products, or just their cloud computing division. A lot of those various areas, including even Xbox, probably a little bit more popular with so many people staying at home right now. So Microsoft seemed to do pretty good there with their earnings announcement yesterday, but they're probably going to give back a little bit. You'll notice here, I know it's hard for you to see, especially if you're on your phone, so I'll just read this off. The bid on Microsoft after hours here tonight was 176.10. The ask 176.30, and so that's $3 per share lower than where this stock closed today. And again, that's as a result of being associated with other stocks like Apple and Amazon. So We'll see. Maybe a little bit of give back there even for Microsoft tomorrow, even after producing a pretty decent bounce here today. Let's go ahead and take a look at some other charts here. Let's go ahead and pop on over here to the 3 green arrows setup. And so that is going to be chart 4D. And not a whole lot to report here. It does appear that we've got 3 green arrows across the board on all of our charts in this particular case. So since we don't have a lot to talk about there, let's go ahead and take a look at the 1040 crossover method. Here you can see there is something to talk about, and that is the Nasdaq Composite. You can see that as of this exact moment in time, we actually have a bullish crossover. Now, remember, we have one more day of trading left, and I'm sure David will probably bring this up tomorrow if it does formally close with a golden cross. But right now, it's right there on the brink. You can see down below here, you've got this purple PPO line that is right at the 0 line. The reading of it is a positive number, so it's a positive 0.1492. So if that number is positive, it's basically telling you that this orange line is above the blue line. The orange line being the 10-week moving average, the blue line being the 40-week moving average. Of course, the orange line is going to be more sensitive because it tracks less time, and therefore when you have an upward jut like we just had there, that would be generally perceived as a bullish thing. Now, on all of these other 3 charts, we're not anywhere remotely close to that, which reminds us that yes, technology has been one of the strongest areas since we bounced in the market about a month ago. So be aware of that. Let me go ahead and maximize that cell so we can see it a little bit better. And you can see just barely there that that orange line is up above that blue line. So we could very well be crossing back on over for a bullish 1040 crossover method posture here on the Nasdaq, but it's going to be several weeks before the other indices are able to do that. Out of curiosity here, I'm going to pull up a monthly chart, a 20-year monthly chart here as well, just to kind of get a sense of how things are looking here. And you can see that the month of April was a positive one where we finished well off of the lows, but you can see that the month was basically an inside month. The high of this month and the low of this month were entirely within the high of last month and the low of last month. So while it was a very positive month there, we didn't see like a big continuation type of a candle going forward. So I think the point is we're still in wait and see mode. Yes, we've had tradable ranges, but we really haven't seen a reversion to the mean type of a move to suggest that there's going to be a strong trend. I think people are still a little bit cautious, a little bit hesitant about this economy and what it's going to mean for the stock market itself. In fact, we had that very conversation today in my question and answer session. So for those of you that want to check that out, that is posted to the calendar there. At least if you're a premium member, you're welcome to check that out. And of course, David had his portfolio management class as well. So take advantage of those resources as well. All right, let's go ahead and take a look here at some 12 grid analysis now. Starting with 5A, this is our asset class 12 grid. And as you can see, it's still the same 3 charts that I mentioned on Tuesday that continued to be red. In this case, is the US dollar, oil, and U.S. Treasury yields, still with those bearish postures there. Now, as you can see, the U.S. dollar's situation has gotten more bearish. I already brought that up. We had that conversation on Tuesday in this video, how we wanted to keep our eye on that because it had spent 2 straight days below that moving average. And back here, it didn't do that. And back here, it didn't do that. It went down there for 1 day and then popped out of there. So we already kind of had a hunch on Tuesday that things were weakening a bit more for the US dollar, and I would say that here we are 2 days later, and my thoughts around that have only firmed up. The US dollar is weakening here. And so, we want to keep our eye on that because it does tend to kind of bleed over into other asset classes. Now, that didn't really work out the way that you would think it would today. A lot of times when the US dollar weakens, gold is a beneficiary of that, and today that just simply wasn't the case. Gold was actually down 1.8% today. Now, gold continues to be in largely an uptrend despite today's sell-off. You can see the background color of gold continues to be green, suggesting that the intermediate posture is still bullish. Remember, anything above 80 is that upper reversal zone. So although this says falling right here, it doesn't matter in this particular case because it's in the upper reversal zone. So we're going to keep our eye on gold. I continue to be interested in gold there. We've had some trades that we've placed on those gold-related securities in the last few months and so on. So I'm going to keep my eye on it, and if there's an opportunity to play a bounce here or there, I'll be happy to take a look at it. The problem was I actually looked at a bunch of gold mining stocks before the presentation in preparation because I thought maybe I would just see if I could find a gold mining stock to trade here for our application example tonight, but truth be told, I couldn't force it. And so, one of the challenges is there's very few substantial gold companies out there. I mean, you're probably talking about a dozen, maybe 2 dozen gold stocks that are somewhere between $10 per share and $100 per share. There's just a scarcity of gold companies that are of a certain size these days. A lot of penny stocks, to be sure, but legitimate ones with good liquidity are somewhat hard to come by. And the ones that are out there, their charts didn't look all that appealing right now. So I want to keep the idea in my head. And if we start seeing some bounces out of them, I might very well bring them to your attention. But right now, it just didn't seem like they were firming up enough to discuss. So we'll keep that on the back burner for right now. GLD itself continues to be in a reasonably strong uptrend. But a lot of the gold mining companies don't look quite as rosy at this moment. A lot of them look like they're kind of starting to roll over a bit more than I would like. So I want to kind of just watch that play out from the sidelines for the time being. In terms of other charts on the board, you can see the rest of them are all green, and some of them, of course, maybe look a little bit better than others. One area that did catch my eye here today was high yield bonds. You can see high yield bonds were up here today. So remember, those are also called junk bonds. We had a little bit of a pullback in high yield bonds here maybe 2 or 3 weeks ago, but for the last 4 days, we've actually seen some progress there. And remember, part of the reason behind that is we've started to see a little bit of outperformance out of oil and gas stocks. In fact, that was another major topic of my question and answer session today. We talked a lot about oil and gas stocks. Most of you that have followed this presentation over the years know that one thing that sometimes surprises folks is that high yield bonds and oil and gas stocks are somewhat correlated to one another. And the reason behind that is right now it's a lot of those energy companies that have fallen on hard times that have needed to raise very expensive capital in the fixed income markets and therefore are within that junk bond realm. And so this has been kind of a storyline here for a while, but it's been more important here recently to help support high yield bonds where you're starting to see some life out of those oil and gas stocks after having struggled for so long. The other part of the story with high yield bonds, of course, is that the Fed has been showing a willingness to go in and support all bond types out there, including junk bonds, which had typically not been part of their repertoire, their toolbox in the past. So, that's, I'm sure, playing a role here as well. So anyway, high yield bonds continue to have a strongly bullish posture in addition to having a green moving average, meaning prices above a rising 30-day moving average at this point. And you can see they were up today, whereas many other asset classes on the board were down today. So USO was up today, which does do its best to track the price of oil, and that again is going to influence high yield bonds there. But otherwise, you can see a lot of the stock markets, real estate, even long US government bonds all struggled today, but the junk bond market actually did a little bit better there. All right, let's go ahead and take a look at some sector analysis now, and this will be chart 5C. These are going to be here in the United States as a reminder. So this gives us a kind of a clean-cut way to look at the S&P 500 through the 11 different sector ETFs that exist for them out there. Now, when we're looking at this, you can see that all of our charts are green. In fact, not only are they all green, they're all dark green, telling us that we have strongly bullish postures on all of them. So you need to do your best to kind of pick and choose, which ones kind of look a little bit more attractive to you than others. And you can see that there's a couple of charts up here at the top that a couple of days ago struggled. So you guys will recall hearing me talk about communications and technology struggling on Tuesday. That was a day where a lot of those big time tech and internet companies did struggle on a relative basis. But you can see that those charts have firmed up in the 2 days since. So maybe that was just a strange one-day phenomenon. Hard to say. Tomorrow again we're going to be tested with that theory with Apple at least negatively affecting technology. In fact, you can see XLK is trading down below $91 after hours, even though it closed at $91.41 here to end today's session. But anyway, you can see that their intermediate lines are at 95, right? Remember that this only goes up to 100. So when you're at the 95th percentile, you're up there in kind of some rarefied air. So those two are really strong areas. And then you also have discretionary as a very strong area. But again, discretionary is highly influenced by Amazon. And you can see here that XLY is down trading below 115 after hours, even though it closed at 116.60. So, be prepared for discretionary and technology to struggle tomorrow on a relative basis, assuming Apple and Amazon continue to struggle since they are so influential within those particular sectors right there. But communications, maybe they'll be able to kind of avoid that a little bit more since Apple and Amazon are in technology and discretionary. Maybe communications will be left alone. Hard to say, but it at least allows me to transition into our trade application example here for tonight, because the stock that I wanted to look at is a stock that is a prominent fixture within the communications ETF. So remember again, as I go and show you the stock now here in just a moment, that the S&P 500 still has a bullish posture, and the communications sector still has a bullish posture. And therefore, I've kind of got a green light to take a bullish trade on a communication stock that is also within the S&P 500, because I know sometimes people struggle with the idea of taking some bullish stocks when they don't feel so comfortable with the economy. Now, this particular stock, as I kind of mentioned in the intro, is a stay-at-home type of a stock, and one that might actually be seeing its services used more now that folks are at home during the day as opposed to at their jobs. So let's get into that. I'm going to come on over here to chart 3A. This is our shorter time period chart that I oftentimes use for my swing trading classes. And I want to pull up Netflix, NFLX. You can see here that Netflix had a pretty interesting day. We had been sliding a bit on Netflix. In fact, I tweeted about Netflix along with a bunch of other, so-called COVID-19 plays yesterday. So there were about 12 of them that I tweeted out. Some of you might have caught that, where they had all been really struggling. And I said it'll be interesting to see if some of these that are still above their rising 30-day moving average will be able to bounce. In fact, another one that I've had on my radar is Clorox. Clorox was another one that I mentioned in that tweet yesterday that had been sliding, and I'm wondering, are they going to get a bounce? Well, they report their earnings tomorrow morning, so I'm going to be very curious to see how they come out. But they actually had a pretty solid day themselves. They were up 1.3%, bouncing off of their moving averages there. Now, you can see that the moving average actually fell, so that moving average is now yellow on Clorox, meaning that price is above a falling moving average, versus what we were looking at just a moment ago with Netflix. Its moving average has continued to stay strong throughout this, despite it sliding from 449 at its high all the way down here to about 392 at its low yesterday. So that moving average has continued to remain strong during that entire time period right there. You can also see kind of an interesting phenomenon taking place here with the low of yesterday's candle. I've got my cursor right here, and if you look close enough and you see that it's kind of got that crosshairs feature to it, if you were to kind of track your eye to the left on that thin gray line that you see there, you will see that there were a couple of candles back there, one in February and one in early March, where the tops of those candles went right up to that thin gray line. Now train your eye on the candle just yesterday, and you'll see that yesterday's low went right down to that thin gray line. So the two candles I was talking about was right here, and I think it was this one, maybe it was this one. The tops of those all went right around the exact same level where this stock went yesterday, and that is a theory in technical analysis. Old resistance can become new support once that breakthrough takes place, and that breakthrough took place back over here in these candles in mid-April, as this stock had a really solid 4-day rally right there. And in doing so, we were able to get up and over the resistance points right back here and right back here. So there's this theory that you have this breakout retest. We've had that retest kind of phenomenon taking place here over the last couple of weeks, and then finally yesterday it was able to do the true retest where the low of yesterday's candles basically came down and touched the top of this candle and the top of this candle over here. And then lo and behold, what did we get today? We got a nice rally out of Netflix today, despite the stock market itself being down. And so that's a promising sign there as well. And not only that, but we also have what's known as a close above the high of the low day. For those of you that used to be with us at the prior company that David and I used to work for, you'll know that particular language or that acronym that we used to use back there. That's called CAHOLD, close above the high of the low day. And it's usually a way for us to actually, signify a bounce type of a setup. So I'll be curious if we can get that. Now, keep in mind, Netflix is still considered more of a kind of a techier company. And so it is down after hours. So that is a little bit of a risk to this trade. It's trading at 4.14 after hours, so it's trading down $5 per share after hours as a result of what's been going on there with Amazon and Apple after hours. So, that's both good and bad. On the one hand, the chart won't look nearly as pretty tomorrow if it closes at 4.14 tomorrow afternoon. So some of you might decide, you know what, I'm going to wait and see. I'm not going to necessarily put a trade like this into your own paper money account until maybe, midday, just to see if Netflix can continue the strength that it showed us here today, because it is possible that this stock sells off and the entire stock market slides tomorrow. Remember, we have seen plenty of instances where stocks have slid into the close on a Friday because people don't want to be holding stocks over the weekend. So that's a possibility that you can throw out there as well. But others that are maybe a little bit more ambitious and maybe they liked Netflix anyway, they just wanted an excuse. Well, here's your excuse, right? You've got to close above the high of the low day. You do have a bullish near-term posture, so this blue line is going higher, and you have a nice kind of jut up and away from that rising moving average in addition to the breakout retest. And that theory of old resistance becoming new support. So a lot of different things kind of matching up here, but what we're fighting against is that tomorrow could be a sour mood in the market in general, and it's certainly possible that this stock could struggle as a result of that. So we've got to be maybe a little bit more careful there. So what I opted to do here in this case is not be overly aggressive. Instead, I'm going to be doing what's known as a bull put spread, and the strikes that I've selected for that is over here. You can see it loaded up down at the bottom. Going out to the June monthly contracts, so these are the ones with 50 days until expiration, and I'm selling the 370 strike and I'm buying the 365 strike. And in doing so, I'm getting a credit of $1.25. Now remember, we'll probably get filled at a better credit than that tomorrow morning because this stock in all likelihood will fall to start the day tomorrow. And so our credit might be as much as $1.30, maybe $1.33. So the point is, this one will have a good chance of getting filled. There are times when I do my trade application at night, and you can tell whether we're going to get filled or not just looking at the futures. This is one where the futures are down. I'm doing a bullish trade, and so there's a very good chance that I'm going to get filled on this first thing in the morning, for better or for worse. We'll see if it's a good idea or not as time goes on. But what we're trying to do here is gauge whether we think the stock will stay above the sold strike, right? In this case, our sold strike is the 370 put. So we come back on over here to the chart and look at where 370 is. And it's about right here where I'm pointing on that chart right there. So that would put us right back into kind of this congestion zone that we were in right around the first week of April. And it did seem like there were people willing to buy the stock right there that eventually got their wishes fulfilled with that nice 4-day rally that I mentioned before. So if you were somebody that says, oh man, I missed Netflix, I could have purchased it here right around that time period, well, this is your chance to kind of have some bullish exposure and have that time period right there be a defender of your bullish trade. Now, if it falls below that, remember that's why we also, as part of this trade, are buying the 365 strike. That's effectively our built-in insurance contract, right? It's possible that we had a terrible month of March, a great month of April, maybe May is equally as awful. Maybe the whole stock market just completely implodes upon us once again. And if that's the case, then that's the benefit of doing a bull put spread as opposed to just selling a naked put all by itself. So we've got a little bit of built-in hedge there, but at least we have some reason to believe that we have a bullish setup. And again, we have a bullish posture in the stock market. We have a bullish posture on the communication sector. And now we found a communication stock in Netflix that's giving us a nice hold pattern there. And we'll see if that can bounce us a little bit higher. So let me go ahead and click confirm and send, and we'll take in $125 to just do one contract here. And if you were to calculate that return on risk, it's about a 33% return on risk when you're dividing the 125 into your 375 right there. So let's go ahead and send that in, see if we can get filled first thing in the morning. All right, well, thank you for joining me here yet again. Remember that tomorrow I'll be teaching my options for long-term investors class at I think it's 10 a.m. Eastern time. I get confused because of our schedule changes that we've had here lately. But anyway, that'll be 10 a.m. Eastern time. And then David will be teaching his technical analysis class a couple of hours after that class is done. And so we'll look forward to seeing many of you Plus and Premium members in our classes tomorrow. And then tomorrow night, David will be doing his Market Outlook live session and then doing the Market Outlook video later on in the evening. I'm sure he'll have lots of great things to talk about there as we head into the weekend. And then remember that I'll be doing some live tweeting during the Berkshire Hathaway annual meeting Saturday afternoon. If you're interested in that, check out my Twitter feed at that time. All right, with that, have yourself a great rest of the evening. If you got value out of tonight's video, please do me a favor, go over to Twitter and click like. And I'll wish you all the best of success with your trades and your investments. Goodbye for now.